Hi, welcome to the Market Alert for Friday the 25th of November 2022. So yesterday was really quiet. There's no news to shout about at all. This is the only thing that I can find is that the APAC sentiment underpinned post FOMC minutes contained trade elsewhere. So yeah, I mean the DAX moved up sharply, which was good. Managed to get a few quid out of that one, but yeah, very quiet yesterday. So in this alert, I want to bring your attention to the implied volatility. I haven't looked at this for a long time. Now, there's a relationship between this and sort of forecasting what the markets are likely to do going forward. Now, what I've done is I'm going to include this link here. Let me just squeeze this down a bit. A video I recorded 8 years ago. It's on YouTube. So I'm going to include the link on what the implied volatility is and how to use it to forecast, just in case you're not up to speed on this. And it's something that I used to include in the market alert on a daily basis, but dropped it because it changed with the pandemic. The numbers became higher. It used to be that when the implied volatility got down to the lows of 10, then we would see a correction. But it now appears that this new base for the implied volatility is around 15, and when the market drops or the implied volatility drops to these sorts of levels, you will see that the stock markets, the underlying market, actually moves to the downside. This is inversely related, so if the volatility drops off, then there's no chance of the market, the risk is reduced, I think is probably the best way to describe it. And of course, I didn't notice this, but we could have actually picked the bottom of the October lows, no problem at all, because one other thing that happens with the implied volatility is that when it doubles in value, it actually identifies the bottom of a recent correction, crash, or retracement. So what I'm going to do, as I say, is I've included this link to this video so you can actually have a look at it. And going forward, we'll have a look at this because we're reaching, again, that sort of point. The numbers aren't updated because the market was closed yesterday, but this is 16.95 for the mean, which is the one that's highlighted in yellow there. So again, we're getting down to that 15% level where the underlying market, i.e. the Dow, US markets, etc., stock markets, actually put in a correction. And that's interesting because when we look at the charts at the moment, the market continues to move to the upside. And we're seeing, this sort of risk is off the table. But of course, when we get to these levels, the market then corrects, as you can see there. And once we double in value, we then tend to find a bottom as well. So having established that our new sort of base number is no longer the 10% area following the pandemic, but 15, we can now reintroduce this and keep an eye on this and actually note where these potential bottoms and tops are in the markets once again. And I've used this since 1994 when I actually discovered this. But like I say, I let it drop because it went out of sync until I was looking at it yesterday. I collect the data every day, but I hadn't charted it, which was a big mistake. And I should have done because I would have actually been able to spot this and we would have been able to use it. But hey-ho. Better late than never, as it were. You tend to drop these sort of things because you have to input the data every day manually. It costs a fortune to get the back data on this, but I need to because for some unknown reason I haven't got the 30, way above 30 in my data. So I will also buy this and add this back into my own spreadsheet. Like I say, that we'd used in the market alert up until a few months ago. So there you go, that's really interesting. I have to say, that indicates to me that we're getting near to a potential market top in the stock markets. And given that, the midterms are out of the way, Black Friday's out of the way, Thanksgiving's out of the way, we've only got Christmas to get out of the way, and I think there's going to be some carnage coming down the line by the looks of things. Seems to be a bit of a precursor. But do check out the video. Like I say, I recorded this 8 years ago. It was on Vimeo, and I spent most of the morning trying to work out how I could get it to you. Then I remembered that I'd actually transferred it onto YouTube. So go and have a look at this video because it's well worth getting to grips with the inverse relationship between the implied volatility and the underlying stock market. Okay, let's move on. Economic news today is zero, so the market will make its own direction, i.e. probably to the upside. Although I have seen on a Friday following the Thursday Thanksgiving where the markets have actually tanked as well and corrected. So, you've got to trade what you see with regards to this as well. Because the market was up yesterday, we believe that it should be up today. It could be, but also noticed there was a bit of weakness coming in there yesterday. Gold-silver ratio moving back to the upside there. Okay, let's crack on and let's have a look at the Dow, the DAX and the S&P from yesterday. It's very quiet, but still worth a look and a catch-up. So in the Dow yesterday, obviously a very tiny bar because the market was closed. Electronic session overnight, the market's moving lower. We need to just expand this so we can get a closer look and drop that down there. So there you go, you can see we're sideways at the moment. 30-minute chart sideways as well, sitting on that 50 EMA quite comfortably. And also yesterday's, I think that's yesterday's low from what I can see. Yes, it is. And obviously this is distorted because of the small range that we had in the daily chart yesterday. So again, we're going to have to get through today to get that volatility back that we saw in Wednesdays. These bars need to expand either one way or the other. In the German DAX, also you can see the market up yesterday. I'm going to expand this out because I spoke about this yesterday. Said there was an ascending triangle in this market that generally it breaks to the upside, which it did. It blew through that yesterday and moved higher. In the 30-minute chart, you will see that occurring just here after the open. The market was sideways and then it blew through the previous day's high, which also blew through that ascending triangle type formation in the daily chart. We then saw a pullback from the R2 as the market was overbought, showed divergence, and then came back to the high, which it used as support, which I've spoken of a number of times in the alert. We also see demand coming back in at this level, market back up, and then trading sideways. And overnight, the market is currently sitting below yesterday's close, but also at the DP level and the 50 EMA. So poised to actually make an attack on the high at the moment because it's not going down. It's closing above the 5-bar moving average, which is showing the green there. In the 5-minute chart, overnight, the market gapped lower but has filled the gap. And if we have a quick look at yesterday's move on the upside, you'll see there we sat on the close. We've got the 200 MA, we've got the support from the previous day, physical support, and we've got all of the averages as well. We break above this and then we head to the upside. The market traded sideways and then continued to move to the upside there. And yesterday's trades, just to show you that move, I took advantage of it, as I'd spoken of in the market alerts, that it was likely to move to the upside, break through that resistance. You can see there that we took advantage, 139.75 there. So that was the trade for the day. We go into Thanksgiving and the market becomes quiet. So we'll just have to see what happens today, see if we can add to this. In the S&P for the daily chart, still stuck at the 200 MA and overnight also as well. But it looks like it, if it breaks through this, we go through the 89 from here, projected back to there. But that 200 MA at the moment certainly creating a bit of a resistance for this market, as you can see there. But tiny yesterday, at the moment, just a bit of overnight weakness. But it's not selling off, is it? That's the key there. 50 EMA, a lot of support there with previous support areas, which you can see, and also the low of yesterday. A bit like the Dow, really. We need to get above the DP, take out yesterday's high. Again, narrow bars because obviously Thanksgiving, we need to get some volatility back into there. FTSE, also quiet day yesterday as the US was closed. Still above the 89 though, but still got to take out this resistance to the left. 30-minute chart for yesterday, where we had that one spike up with the German DAX, the market back, and then it's been sideways. However, we have broken the DP, but we found support there and making our way back. And the reason for that, if you go from here up to here and move it over, you'll find that we're at the golden ratio just at this level. And in the currencies, very quiet for yesterday as well. Got a bit of resistance at the 62% retracement of its previous down move. You see there, trying to get back. So a bit of weakness there. 30-minute chart yesterday, only about 80 points move for the GBP JPY. In the pound, higher again yesterday. Watch that 200 MA in the daily chart. Let me just bring that down. You'll also see there's a lot of selling in this area as well previously. So again, keep an eye on that area. It's 121 area, 122. I would have thought it's going to be that sort of area. It is, yeah. So 122 to the pound. 30-minute for yesterday. Again, very, very slow day. About 80 points there, or pips, whichever you prefer. The market at the DP came back below it, stopped at 120, as you can see there. 121, that is actually, not 120, that's 121, that red line. And then moving back off this and towards the DP and just through it. And finally, US dollar, obviously very quiet yesterday on the electronic market, but back at the 89, isn't it? Or did we do a double bottom there? No, back at 89% retracement there, as prices try to find some overnight support, 78.89 level there. And in the 30-minute chart, prices are sideways, just struggling with the DP a bit, but we need to take out that 50 EMA, which we've not done for a few days, as you can see there, where it's created a bit of a resistance for the markets, going back a few days this week, once it got broken on the 22nd. In the metals market, silver up again yesterday, but only a small amount. Needs to stay above the 200 MA, but that depends on whether the dollar can move off those lows. Yesterday, choppy session all the way down, and yesterday's low already taken out overnight, but we bounced back, and now we've come back and put in an overnight low, where there's a bit of support there at the moment for the metals. And finally, in the gold market, sideways to higher. Doesn't pull back as much as silver, which is why you saw the gold-silver ratio spike up a bit. And in the 30-minute chart, again, choppy sideways, moving higher overnight, taking out yesterday's high, and now finding support at the DP and yesterday's close. So yeah, there we go. Quick roundup of yesterday, very quiet, no news today, see what the market does. And like I say, have a look at the implied volatility video, so that we can look at reintroducing the this as a tool in order to see if we can find the top of this market, because we've certainly got patterns there that help us to forecast this. Okay, have a great weekend, and as ever, thanks for watching. See you in the next one.